3, 2, 1, go.
Hello, everybody.
Welcome back to another episode of Team Sessa Talks. We are excited today because we have a special guest. She is not only one of the mortgage brokers that we use, but she's also a good friend of ours.
A great friend.
Yes, and one we constantly refer, right, Chad?
Yeah, and we've become friends. We didn't start off that way. We met in business, and we've grown from there. Welcome, Rakhee, to our podcast.
You're welcome.
Thank you for having me. And again, thank you for your friendship and your support.
Beautiful. Thank you.
So Rakhee is the owner of Mortgage Savvy. She's got a great team. Where's your location again?
So we currently have 2 locations, one at Don Mills and York Mills, and a secondary location at King and Bathurst.
Okay.
King and
And
Bathurst.
I'm gonna add to her locations. She has a third location called the GTA. Because although I refer you for mortgages to
Correct.
our clients, I don't know how many actually go to your office. You're always meeting them at their place of work, where they
Correct.
live, whatever's convenient for them, right?
For sure. So as a mortgage broker, the one advantage we have is that we can actually come out and see our clients in their place of work, during their lunch hour, or in their home, in their comfort of their home, where they're able to, have some meaningful conversations with us about their finances.
You could talk in private, relaxed atmosphere, and your hours of work.
24/7.
I'm laughing because I'll send her messages after meeting with a client at 9, 10 o'clock at night and on a Sunday, and she's responding to me.
Well, purchasing your home or securing a mortgage is one of the largest financial decisions our clients are going to make. And we need to be accessible. This is usually the piece that can cause anxiety. And my goal is to provide a level of peace and security and knowing that you're in safe hands and that you're receiving the best rates and the best service as well.
There's a lot of people there's a lot of things about mortgages. It's one of those things that, and I'm dealing with clients in real estate, and it seems that they either know everything about mortgages, but they're wrong.
Correct.
And it's one of those things that, I know all about mortgages. You really don't until you really get into the nitty gritty. So these podcasts are just casual conversations. We do have some notes, but it's not to say that it's scripted just for everybody out there, but there's certain things that ahead of time, I know I'm speaking with Rakhee in mortgages, and I don't want to miss the opportunity of forgetting to ask a certain question. So that's what we kind of have in front of us here. So in introducing Rakhee and Mortgage Savvy, I do want to say that she's got awards. She does a great job in the business. Mortgage Savvy is ranked the top 2% across Canada for your network, right?
Correct. So for our volume of funding, we do a large number of mortgage funding volume in the country, and that has given us a ranking of top 2%.
That's fantastic.
Which we're very
That's awesome,
honored and privileged
Congratulations.
to confirm.
Congratulations.
Thank
I
you.
also want to announce, and this is a really, really cool award. For 2019, she has the Woman of Distinction Award from the Canadian Mortgage Professional Association. Congratulations.
Thank you.
Woman of Distinction. I wish I had that title.
No, and it's nice because, the...
Danny missed an opportunity to cut me up there, but
No.
he let it go. I opened the door for you to make fun of me wanting to be Woman of Distinction.
Hey, we're professional on this podcast. Wow. It's nice though because we've been working with you for so long now, and we've seen your business grow and everything you're doing on social media, everything like that. Just it's nice to see a woman being empowered and actually creating such a strong business, because being ranked 2% in Canada, that's amazing.
It's huge volume.
Right? That's amazing. So that's very exciting to hear.
Huge volume. And she's hands-on. It's not
Yeah.
like she's got 100
Yeah.
people working for her. She's hands-on. She meets with the client. She talks to everybody. I know when I need something, I call her directly.
The clients deal with her directly too, and it's that's something you don't see that often. So very,
Thank
very,
you.
very, very nice to hear.
Thank you. That's the part of the job that I think I enjoy the best, which is actually sitting with my clients and understanding what their personal goals are and ensuring that we're aligning their finances to help them achieve those goals. Often I can relate as well. I have a family. We purchased our first home almost 10 years ago now. Wow. And strategically making the right financial decisions pertaining to our mortgage has helped us get where we are today. And I feel that there's such a gap. People feel that they know everything, and we've had so many changes.
Well, what you don't know, you don't know.
Correct.
Right? So let's talk about this. Let's dive right in. I talked to a client, we're getting ready to buy a house, or it's early in the process. They say, Santo, we're thinking of buying. And I say, great. One of the first things we got to do is to introduce you to a mortgage broker, and let's talk. And let's see really what you can afford to buy. And they say, oh, no, I'm just going to go visit my bank. What's the difference between a mortgage broker and dealing with the bank for mortgages?
So as a mortgage broker, when you're meeting with us, we're doing one credit pull for you. And we have access to over 40 lenders. So we have access to the banks, we have access to the credit unions, and we're ensuring that we're placing your mortgage with the lender that's going to offer you the best product and the best rate. When you're walking into your bank, you're restricted to working with that lender's specific rates and products.
Oh, for sure. If you walk into Royal Bank, they're not going to tell you that CIBC has better rates.
Correct. In addition to, there was a myth that you'd go to a mortgage broker when you couldn't get qualified at a bank. And that's a misconception. The role of a mortgage broker is to have access to those rates, specials, and those incentives so that they can pass on those savings to you. So oftentimes, the rate that we can offer with the bank is lower than what you can get at the branch level. And that's often surprising. I've had clients come to me with a pre-approval that they've obtained from a bank, and very often we can place it with the same institution, just at a lower rate. We also have access to incentives, such as cashbacks, that may not always be available at the branch level. So we're ensuring that you're getting optimal benefit when securing your mortgage.
And it makes sense. It's with the banks, it's basically, the way I see it in street level, it's fear of loss.
Absolutely.
You have a client, you fill out a mortgage application, you take it to one bank. They know you're also taking it to their bank across the street, the bank on the corner, the other lenders. So the bank knows if they don't deal with you a certain way, you've got other options. And you're entertaining those other options, whereas somebody who's banked with the same bank for 20 years, they go in and the bank I've seen it where the bank just gives them a rate in a sense of, we know you're not going anywhere else. This is the rate. And I've seen you beat employees of the bank. I've seen you beat, they tell me they have an employee discount. And I say, yeah, but let's get a second opinion because maybe we can get you a mortgage broker discount.
And so now, just a quick question for you, because I think that one of the things that people think about when they do think of a mortgage broker is they think, like you said, they think it's going to a lender that's not, or let's say a B lender, right? I think that's what they're called.
Correct.
Anyone that's not a financial institution. But there's oftentimes rates that you can get that are better than the A lenders with B lenders. Is that true?
So there is a distinction. We're so used to hearing, the big five banks as kind of being your go-to, and they still are for the right sort of product. However, we also have access to what are defined as monoline lenders. So they have one line of business, which is just mortgages. There's no bricks and mortar, so there's no physical location, meaning less overhead, allowing you to secure a lower rate.
So in that sense,
that's all they do, just
That's
mortgages.
all they do,
exactly,
just mortgages.
And in that sense, it doesn't matter which bank you go for. So what'll make it?
Not necessarily. So it's ensuring, for example, some of our monolines will have minimal penalties for breaking a fixed rate mortgage. Whereas those that are, aware of how mortgages work, when you do have a fixed rate mortgage with a big bank, that can carry sizable penalties should you decide to break that mortgage and pay it off prior to the end of the term. Whereas some of our monoline lenders will have a little bit more flexibility there. So not only can you get a lower rate, but you're also able to minimize your penalties. And as we know, life is unpredictable, and it's great to have an exit strategy should you ever require that.
Well, I've put people in homes that have told me, yeah, we're going to be here for 5 years and then consider selling. And after 2.5 years, 3 years, they're saying, hey, we're ready for the next house. And things change.
Yeah.
Things change.
But it's just interesting to know, because I think that people think, I'm going to get the best rate at the bank and that's it. But there are other options out there that you would never know about unless you spoke to a mortgage broker. And like you said,
sure.
there's no real repercussions, because you're doing one check
One
and
credit
then
check.
and then you're just shopping that around to a bunch of different lenders, and having a network like you have with all the lenders makes it easy to find the best rate for everyone.
So
right?
that myth is out the window that you hurt their credit rating when you do a check. You pull once.
We pull once.
Where if they were to go to each bank, that's being pulled each time.
Correct, and that would have multiple pulls, and in a day and age where we all are a little bit more sensitive to information security and privacy, I will always have a conversation with a client and ensure that they're comfortable working with us. And then it's great to ensure that your information is in one set of hands,
Right.
and that in 5 years, should you require any support or assistance with your mortgage, that we're still going to be around. We're going to be here to take your calls and ensure that you're getting the advice that you need. When dealing with a branch, what we also find is an obstacle sometimes for clients is when they do go back, there's been such turnover and such change that the person that they dealt with on one occurrence when purchasing a home is no longer available to address their questions.
Well, that's not their business, though.
For sure.
The person you're dealing with around the corner gets paid whether or not you get the mortgage, right? Whether or not they qualify for the mortgage, it means absolutely nothing to them. They're just typing a bit of information into a computer, and then they get a promotion, and they're shooting for that promotion or a different branch, and they move from there. And the bank's attitude is they're not concerned of who's dealing with you.
Yeah, and you know what? It's funny that you mentioned that, because I actually, when I was working at the law firm, we saw that quite a bit, where there was, it was, let's say, like an elderly couple that had their mortgage for 20 years. It's finally paid off, and then they want to get another mortgage to help their kids buy a place, let's say. So put a mortgage on another property to help their kids buy a place. And then they go back to the bank, and now they're dealing with this 21-year-old who just graduated university, doesn't really know anything about mortgages, but kind of put something in the system, and they're just freaking out because it's not what they thought it was going to be, and there's so many things missing and stuff like that. So it's, I just hearing that example, really.
This opens up the discussion, though, that there's so many different areas. So the person at the bank, I know they probably started off as a teller.
Correct.
And through seniority or them wanting to learn more, they kind of move up through the rankings in the bank. So do they have, apart from what the bank itself tells them, this is how you qualify somebody for a mortgage, how's that work for you? Like, what if I wanted to be a mortgage broker tomorrow?
So mortgage brokers are licensed. We are actually educated in how to structure a mortgage. We're at the branch level. They're graduated tellers in essence, and do not have any sort of certification or licensing in mortgages. They're information collecting, and then that information is going to a back-end underwriter for processing. So broken telephone of information can also play a role in how a mortgage application is put together. Whereas when you're working with a mortgage broker or you're working with a mortgage savvy team, your information is being underwritten by ourselves directly. And the advice you're getting is pertaining to your specific situation. And there is a level of comfort in knowing that we're going to be able to secure you that mortgage.
A lot of people don't know this stuff. I'm telling you, they have no idea. They see the big Royal Bank sign, and this is not we're not bashing the banks.
No.
It's a different service that you offer, and you need a license to do what you're doing,
Absolutely.
or you can't do what you do.
Correct.
And at the bank level, it's just no, you don't need a license, and the bank could really put anybody in that position that they feel can punch in the details into the
Correct.
computer, right?
Correct.
Okay.
And that's where things may not necessarily go as well as planned if the information has not been put together correctly. So mortgage brokers, and especially the deals that we sometimes will take on are where a client was pre-approved at the branch level, and then at time of securing the mortgage, there may have been obstacles. And this is where we can come in and ensure that the file is put together correctly and helping the client secure that financing.
I want to go in so many different directions
I know,
with
me
this
too.
conversation. Okay, so I want to get back in a second.
Yes.
Remind me, Danny, to get back to pre-approval and pre-qualify.
Yes.
Let's talk about, we throw the word rate around,
Yes.
like interest rate. What's a good rate these days?
What's a good rate these days? So it's important to note that rates are probably lower than they've been in the last couple of years. So if you are looking to secure a mortgage, this is the time to do that.
Even with all the increases that everyone sees on the news?
So we've seen increases, but rates are actually lower than they've been in a couple of years. For overall, we have access to some really great rate specials. If you are looking to buy a property with less than 20% as a down payment, you are going to have access to the lowest market rates. Those are considered insured mortgage rates, and our lowest insured mortgage rate at the moment is sitting at 2.49.
2.49.
On a 5-year
sounds-
fixed.
With under 20% down?
It's nothing, right? Nothing. Nothing.
That doesn't sound like that.
Free money, right, Danny? Right, Danny?
I'll pay that.
Free money. You know, and Danny, you just said something there, but I've been hearing they've been going up. That's what you said. And I've said this so many times, and this is for any subject, anything we're ever talking about. It's really about where you get your information from.
Correct.
And if it's from City Pulse News, their goal is to get eyeballs.
I feel
So-
like we bash a lot of people when we do these podcasts.
Well, it's where do you get your news from? You know, if I call GM and say, hey, how's the Cadillac brand? What are they going to tell me? It sucks, it's shit. No, they're going to tell me how great it is.
Yeah.
If I go to Ford and say, hey, how's the Cadillac brand? What are they going to tell me? How great it is? They're going to say, it sucks, you should buy Ford. Where do you get your news from? Well, CP24 is about eyeballs. They want eyeballs, the newspapers. It's about attracting eyeballs to what they're doing. So when rates go up, it's drama. Oh, rates are up. They sensationalize that. When rates go down, it's not as sensational. Same with prices. In home prices, prices are dropping. We're 5% lower than we were last year. Don't believe that, folks. I'm not saying that as a fact. It's just an example. And why? As prices go up, it might not have the same effect, or vice versa.
It causes a lot of panic. That's the problem. It causes a lot of panic. And there's a lot of people that I'm sure are on the fence about buying, but then they hear, oh, there's going to be a rate increase, and it happens. And then it's like, okay, you know what? Now I can't. Now we'll just wait. I'll just wait.
But if you read between the lines, there could be a rate increase. What's Bank of Canada going to announce? There could be a rate
Yeah.
increase.
There could be.
And then that, like, oh, and then people remember, I thought there was a rate increase, and there wasn't.
Yeah.
You know?
Correct. And there was actually a Bank of Canada rate announcement this morning.
This morning.
This morning.
Yes,
Oh,
just
I didn't
this
hear about
morning.
that.
We knew this. Timing is everything. That's why we're doing this podcast today. What
So
happened?
the Bank of Canada chose to just hold rates. So predicting rates, I often will use the analogy, it's like predicting what the weather's going to be.
Oh,
How
so
often is your
they
weather
could be
forecast?
wrong and never lose their job? Is that what you mean?
So we do overall find that it is like, I wish I had a crystal ball. It is like predicting the weather forecast. There really is no certainty. However, rates at the moment, in my personal prediction, will continue to hold. My prediction is that as we enter into 2020, that we may actually even see a rate drop, potentially.
Drop.
Correct.
Wow. You heard it here first, folks. Sorry, it's my first day with my new lips here, Rakhee. I'm not pronouncing things properly here. Okay, so we got a good interest rate. People throw around the words, and they do it to me, and sometimes I get confused. Pre-qualify, pre-approved. What does all that mean?
So there is a distinction there, and I'm so glad that you asked the question, Santo. So when we're doing a pre-qualification, what we're doing is we're collecting your income information, and we're looking at your down payment situation, whether that be selling to purchase, refinancing to purchase, or you may be a first-time home buyer that's going to be utilizing savings or a gift towards purchasing a property. And we're going to give you an analysis and a confirmation of what you can qualify for. I like to use the analogy, before you go shopping, you want to ensure exactly how much you have available on your credit card before you initiate the process.
Make sure you need to talk to my wife about that.
So very similarly, what we'll do is we'll collect information and we'll give you an assessment of what your overall mortgage qualification or purchasing power is going to look like. And that is your mortgage pre-approval.
Okay.
Your actual mortgage commitment, when you're actually getting your mortgage secured, you have a lovely document from the bank that's saying this is how much we're going to lend you on this specific property. is another process that involves not only reevaluating your personal sort of financial covenants and your income, but also looking at the property to ensure that the market value or the appraisal value is in line, ensuring that a lender is comfortable lending on the property. So there's two aspects to an official mortgage commitment. It's you and the property.
And I see that when we work together. For those times that I've referred you, which is every time, but it's up to the client should they choose to go the Rakhee route, or they're going to stick with their bank. When they stick with their bank and they're going through the approval process, rarely do I get a call from the bank or anybody saying, can I have a copy of the MLS listing? I need to attach this approval to the actual property. But every time I'm dealing with you, even really early on in the process, even before we've even started shopping, you're saying, give me a listing of what the home's going to, which property are they interested even in putting in an offer on, so we know early on in the process if they're going to qualify for a mortgage on this property.
Correct. So we're going to look at where are property taxes sitting. Are there any common element fees that need to be taken into consideration in the qualification? And we're always going to ensure that we're doing an appraisal of the property. So that's something we take on. We cover the cost for our clients. I need to sleep at night, so that needs to ensure that I'm giving my clients sound advice and that we are also ensuring that we're doing a thorough review of the property being purchased.
Mm-hmm. And I remember that's one thing when we sat down with you to discuss the purchase. You went through everything. So it's not just about, okay, how much do you guys qualify for? How much is your income? How much debt do you have? It also included, okay, but how much are the property taxes going to be? How much is the heat going to be? How much is this going to be? How much is that going to be? And all those numbers play into, how much you can really afford, right?
Absolutely. We want you to like us after you've moved in.
Yeah.
So for us, I want to ensure that you're comfortable with your affordability.
Yeah.
You don't want to go to work every day just to pay your mortgage. It's balancing life, and it's balancing life goals as well, and understanding that. Mm-hmm. So absolutely, we want to ensure that you're comfortable with the overall monthly carrying costs associated with making that purchase.
And that's one thing. I don't know, how does it work? Because you do have experience in a bank setting, correct?
Correct, I do.
So in terms of that, how does it work? When do they factor everything in like that? I feel like
absolutely
it's more
not.
I feel like it's more general, right? It's just kind of, okay, how much do you earn? How much debt do you have? Let's say, like, on paper, and then this is how much you can afford, right? But when you factor in those other, because property taxes, I mean, that's an extra $200-300 a month. Correct. Sometimes. Correct. Right? And those are things people don't, common expenses. I think that's probably more easy to factor in, but that's another thing people don't think about sometimes, right? There's a lot of
good question.
There's a lot. Well, I know there's a lot of there's a lot of condominiums in Toronto where you can get into it for $1,800 a month as a purchase, but then you have $700-800 worth of common expenses.
Condo fees, yeah,
Correct.
the maintenance
and
fees.
it's like that'll complete, and you see the initial price and you're like, oh, I can get into it for $1,800 a month, that's cheaper than renting, let me do it. But then you see that and it's just like, that's something you really have to factor in, because that's a sizable amount, right?
Absolutely. And it's also important that you're taking into consideration some of your, additional sort of financial obligations. Those that have young children understand that their childcare costs can be the equivalent of a mortgage payment. And your banker is never going to ask you what you're putting towards your monthly childcare costs.
Well, what about gas for a car? What about insurance for a car, right? No one's going to ask that stuff.
If we factor in Danny as a child, he eats as much as a mortgage. His steak bills are, barbecued steak.
Been a bit of a burden for the past 26 years.
Jeez. Okay, so I want to get back to interest rates for a second, because a lot of people just don't get it. Okay, so you're saying they're lower than they've ever been. They're 2.4. Let's just say 2.5 for easy math. So what if rates go up 0.25%, 0.5%? There's people right now thinking, you know what? It's winter. I don't want to buy now. I don't want to move now. I will look for a home in the fall. They probably could afford to do it now, but they're waiting. No, sorry, not the fall. They're waiting for the spring. Mm-hmm. What if rates do go up 0.25%? Because it's likely, right? Mm-hmm. It could happen. If I say, what if rates go up 2%? Nobody really expects that. But could it go up 0.25%? would anybody go, oh my God, it's we never expect, it could happen.
It could happen.
So what if they do go up 0.25%, 0.5%? What does that mean in someone's pocket? Because 0.25% doesn't sound like much. So who cares?
For sure. And we will have another Bank of Canada announcement in December. And when that does happen, if there is an increase, what we'll likely see is an increase of 0.25%.
Okay. So 0.25%, what does that mean?
Assuming 100,000 mortgage, so I'm going to use very, very simple math and simple calculations. So for every 100,000, that's going to mean, based on where current rates are sitting, and I'm going to use again a very conservative rate of 2.79. Let's assume we see a 0.25 increase in rate. That's going to be an extra $13 per 100,000 of mortgage.
A month.
A month.
So $13 a month. Mm-hmm. Do we have...
Wait, $13 for 100,000?
Yes.
Yeah.
So if
so
the
you got
average...
300,000, that's $39
Correct.
a month.
Correct.
Right? What's the average mortgage out there? Like, how much do people owe on their homes? What's the average amount?
The average mortgage that we're securing for clients is usually anywhere between $500,000 and $700,000, depending on whether it's a condo or freehold property.
Holy smokes.
Dad,
Correct.
quick, what's 13 times 7?
70, it's like a little over $100.
Yes.
Oh, okay. So that's not too bad.
It's not too bad, but it's important to consider that right now, in my experiences, regardless of what you're hearing in the media, the market has been very, very active, and we're still seeing very sort of competitive offer situations with multiple bids. And this is a great time to secure a mortgage. Rates have been this low since May of 2017.
And that was crazy.
It's great.
You crossed sections there. We went mortgages to...
Yes.
Did you see my dad's
came into
eyes?
my domain. When you talk
dad's
about
eyes just popped.
real estate activity, you know what nobody has said? I've said it first, though. What nobody has said, the average price for September of all properties, everything sold in GTA on the Toronto Real Estate Board for September is a 28-month high. Mm-hmm. Nobody's saying that. They'll tell you this September versus last September what happened. They'll tell you, sometimes tell you August to September what happened. But that average monthly number that they're saying, this is what it costs on average to buy a property in the GTA. It's the highest it's ever been in 28 months since May, I think it was, 2017.
So it aligns with
It aligns
with what she was just saying. Then.
Yeah, it's the highest it's ever been.
That's interesting.
Rates are at an all-time low. We're seeing buyers very, very active in being able to locate that property, and this is a great time to secure an incredible rate.
And if you're looking to buy, just back to real estate for a second, there's tons of sellers out there that have been on the market overpriced in the summer, and we've seen some price reductions. We've seen some new prices on properties, or people that have just come on the market that in their mind, sellers want to be sold before Christmas. You don't have to move before Christmas, but in their mind, it's a psychological thing. If they don't sell soon, they feel they're going to be stuck when the snow comes. So now's a great time to buy. We could put some pressure on the sellers.
Correct.
Okay. So let's get back to mortgages. I have a question here. The process, you touched on it a second ago with appraisals. I have seen some crazy things happen. Whether I'm working with the buyer or the seller, we're closing in 3 days, and one day before I get a call from some appraiser that, hey, we need to go and appraise the house. And I know if they need that appraisal, their mortgage isn't ready to go. Like, it's not like we can have an issue closing here.
Absolutely. So for Mortgage Savvy and the way we operate, I'm ensuring that that's one of the first items that we are addressing. We are securing that mortgage and the appraisal, usually during that conditional period or very soon, very quickly after securing that firm purchase and sale agreement.
But why do they wait? Like, why do people wait for just a couple of days before closing to send an appraiser there and to sign their mortgage documents? Because if the appraiser's going, they don't really have a mortgage secured yet.
And this is the misconception that we have with pre-approvals versus an actual mortgage commitment. When you're going into a bank and you're meeting with your financial advisor that's assisting you with the mortgage, you're giving them your financial information, you're giving them a copy of your purchase and sale agreement. They're really viewing you as a sale. They'll secure you your mortgage. Meeting the conditions of the mortgage does require an appraisal of the property. And if that's not being done right away, that leaves you open to risk. They're not anxious to complete that process for you because they're not aware of the overall implications. If there is an issue with the appraisal, that really sometimes becomes the client's concern.
But
if
it doesn't
things do
matter
not
to
go
them.
well.
Yeah.
It doesn't matter. And I don't mean to be blunt about it, but the banks, they're the big gorilla. They've got millions of clients. So if they don't get 5 or 6 or 10 mortgages go through this month, they will never feel it. They will never know. And they really don't. Doesn't matter to them. It's the volume. It's the process. If you don't get those 10 mortgages approved this month, you feel it as a business.
For sure, but we also ensure that we have a reputation of knowing that clients feel secure and safe in working with us and know that they can trust us to ensure that we're taking care of these items for them, that we're sending them a copy of the appraisal, that they have the ability to ensure that our due diligence has been done on the property as well. It's also important to note that when an appraisal is being ordered and completed, it's reflecting recent sales of similar properties in that specific neighborhood over the last 90 days. So the timing of securing that appraisal is also crucial because should we see less market activity in the next few months, that appraisal may be that much harder to complete.
Right.
That's what I was just thinking. I mean, it sounds like there's a massive portion of the process that kind of gets left to the end when you go with one of the bigger banks. And now that I think about it, I remember going back to, like I said, my previous job at the law firm. We had there's a lot of pressure. All that pressure gets put on the client at the end, right? The actual terms or what are they called?
Conditions.
The conditions, yes, the conditions that they have to meet. A lot of the times that happens at the last second, and it's just a lot of pressure on the client to make sure that they can actually secure this mortgage. And it's kind of like the mortgage broker at that point is kind of hands off, or sorry, well, whoever's at the bank there, they're kind of hands off, and the client has to do everything. And it's just not a good way to work, because then you're putting the client under so much pressure. And if something does go wrong, which I'm sure you have seen, we've all seen, then it's a dramatic effect, right? If a property can't close because of the appraisal, and especially if going back to 2017, that first few months, and then after May, once things started to slow down a bit and people were getting appraisals then, but then they realized the property wasn't appraising as high as it would have a few months ago.
Yeah.
Now these people are short $100,000 on their mortgage because the property is not as valuable, right?
It's scary.
And it's doing that beforehand, making sure that part, because that the pre-approval, which is the personal side, right? You would say, and the pre-approval, that's the fairly easy part, and that's the part that the mortgage broker, so yourself and the bank, will do at the exact same time. But it's that second part that's so important, that needs to be done early, right? And yeah, so it's that's I guess where you guys really offer a great benefit to the clients that I don't think they really know about.
I want to just paint the whole picture there. Rakhee's not the one that gives the client the money. So she's not replacing the bank. And in fact, a lot of your mortgages that you get people for are with the bank. Mm-hmm. So we're not bashing the bank's money.
It sounds like
because we still want that. We're sometimes bashing the service, the process of actually getting qualified for the mortgage and getting that mortgage commit. That process of right up to where the bank gives you the money. And the bank is happy dealing with their staff. The bank is happy you giving them and say, hey, I have a client for you, and that's really what you control and take over is the process of, and that's where you can, like the bank, their employees work 9 to 5. That's their job. That's what they do. this is your business. It's different. There's a different level of commitment. Your reputation matters. The person at the bank that you're dealing with, maybe not so much, because there's going to be somebody else coming in there tomorrow, someone else coming in tomorrow. So that's the service you offer. It's a phenomenal service. Must cost a fortune to the client, though, right?
So there is no cost for our services.
Say it isn't so.
So we do not charge fees. There are brokerages out there that do. Mortgage Savvy does not charge a fee for service.
So who pays you?
So we are paid by the lender, and our compensation is based on the mortgage amount that we're securing. And we are motivated to ensure that we're finding the right product for our clients' needs. We're also working with the banks often when securing a mortgage for our clients, but we're ensuring that we're meeting all the conditions of the mortgage at least 30 days before the closing date, and that instructions are neatly sent over to your solicitor for closing. So whether you're working with a branch or you're working with a mortgage broker, it's actually your lawyer that's closing the transaction and registering the mortgage. So it isn't until that you've signed with the lawyer that everything is firm and ready to go. And this is a misconception again for clients. So on our end, as a mortgage broker, we're intending on delivering a high level of service so that you can sleep at night knowing that 30 days before closing, everything is with your lawyer, giving us ample time to ensure that all your questions are being addressed well in advance.
I don't think people understand how powerful that is. Just that peace of mind is something that is like, it's made a night and day difference in certain clients.
It's in a sense, another way to explain it is you go to the bank, what they got is what you get. That's the menu. That's it. Going to you, you don't have any particular alliance. Your alliance is to the client to get them the best mortgage, and you're kind of like the concierge, the VIP service for mortgages in a sense.
That's correct. We're ensuring that we're placing the mortgage with the right product and ensuring that you have the right ingredients or the right sort of policies in place to support you with your goals.
And it's not everybody fits into this type of mortgage. Somebody who's self-employed, I know when I meet a client that's self-employed, I'm thinking, oh, okay, so what do we got to do to get this person a mortgage?
Correct.
And that's as far as my thought process goes, and then I pass them your name. Like, I don't get into it. I mean, I understand a bit about mortgages because of my business as a realtor, but I stay in my lane. I refer to the professional. Same with legal matters. I refer to, I understand a lot about it out of experience because I'm in it, but I leave it to the professionals. Okay. So we're hearing a lot that I hear it often. How are kids today going to afford a mortgage? How not even kids, how is anybody going to be able to buy a house today with the way prices are? I see it from my end, yet I'm helping, I don't know how many at a time, first-time home buyers. Although I hear people complaining, I see people buying. I'm helping them to buy. I'm selling properties that first-time home buyers are buying. What do you see from your end? How are people affording buying homes these days?
So we are seeing families gift down payment. So that is.
No, don't say that. Don't say that. My son's right there. Don't talk about
mom and dad.
Don't talk about gifts.
We are seeing more and more of that. We're seeing, parents sitting with equity in their property and willing to take that to help their children take that next step to purchasing homes. I think from an overall qualification perspective, we often find that that's them challenged, that the income is there. However, clients might be short on the down payment component to be able to take that next step. So that is something that we're seeing, which is where parents are gifting, bank of mom and dad are coming in to support clients and first-time home buyers in making that first purchase. So that's one thing that we're definitely seeing a lot more of. We're also having clients strategically leverage their RSPs. So with the federal budget announcement in the spring, we are now able to leverage $35,000 from our RSPs towards our down payment of purchasing a home.
Okay.
As opposed to the $25,000 part, right?
So that has increased. So that also has been helpful. And if you have two first-time home buyers going on to title together or purchasing together, that's collectively $70,000. So $35,000 each.
Wow. That's good.
Yeah. So that's another, sort of option that we are exploring with clients that may not have any savings currently in place.
You see, sometimes people ask me, Santo, we want to buy a house. How much do you think we can afford? And I say, let me put you through to my mortgage broker, my partner in getting mortgages. And they say, no, just tell me. I said, look, because I know some of these rules, they change on the fly.
Absolutely.
And I don't know what they are all the time. And nor, to be honest, that's not where my focus is anyways.
Yeah.
Okay.
This is an interesting topic for me because
The bank of mom and dad? Can we
Because-
just
no,
get
because
off
I
of that?
feel-
Can
I
we
feel
cut
like-
that out of the final edit here, please?
I feel like this is something that's it's directly like I am at an age where, you know, me and my friends, all of us are kind of, okay, do we do something? Do we not? Like what do we do now? And I feel like a lot of people are turning to renting because they automatically turn down this idea that they can get into a property. And even if they do have a bit of savings, they just automatically assume that, you know what, it's too expensive. Right? But it's, you know, I'd love to encourage everyone, you know, if you have a little bit of money saved, just see if there's an option because
Absolutely.
So how
always-
early in a process
and
should
they-
somebody speak to you?
The second that it crosses their mind, it's
Yeah.
never too early.
And that's the thing. I have friends.
Never too early.
I have friends that, you know, I have friends that are purchased and I have friends that are renting. And, you know, I feel like, you know, the ones that are renting were optimistic and they wanted to buy, but then they just felt like, you know what, the process is too much. You know, it's too much to go through an approval process. It's too much to try and secure a mortgage. It's too much to try and like even just find a place. I'd rather just go online, find a rental property, pay them each month, and then just be done with it. But, you know, I just feel like it's possible for some of these people.
Absolutely.
I have a question.
It's possible.
What about the ones living with mom and dad? Never want to leave.
Yeah, well, that's a different story. I told you I'm not leaving till I'm 40, but don't tell Selena. But yeah, it's just I really want to encourage people to actually, and you know, like we discussed a lot about you know, the process of actually getting approved and seeing what you can legitimately afford, right? And that is something that I know from experience that you take everything into account. Right. So I want to encourage everyone, if you're, you know, if you're a first time buyer, if you're thinking of buying, if you're thinking of renting, you know, speak to Rakhee or speak to someone who's able to, well, anyone at Mortgage Savvy, I'm sure, but speak to someone that can actually give you an idea of what it would actually cost to own a property as opposed to renting, because it might be a small difference, but that difference could potentially earn you income in the future, right? From your equity, stuff like that.
Absolutely. And what we'll often do with clients is go through the exercise of really assessing what they're paying in rent and what that would mean for a mortgage. So with the average sort of market rental rates in the city of Toronto for a condo, you're looking at about $2,500 now for a rental.
You're always paying a mortgage. It's
For
a question
sure.
of, is
Whether
it
you're
your mortgage
yours,
or someone
exactly.
else's mortgage? But you're always paying a mortgage.
Correct. And then there's a portion of that mortgage that's going directly into savings. It's going directly to principal repayment. So it's like putting funds from one pocket right into the other. So you're kind of piggy banking and saving those funds for the future. But also that property is appreciating. And with market appreciation rates, just historically connect with Santo, have that conversation of, you know, running the scenario of where you're living now and where prices have come just in the last couple of years, and then do that calculation. And are you really able to set those goals of savings? I know from personal experience, regardless of what commitments I make, somehow I make, or there's a situation that does arise where I now need to leverage those savings towards an immediate need.
Life is life. Life is life. Things happen, and that money is generally safe when it's put towards a home.
And
For
that's
sure.
that's the biggest thing. I feel like a lot of people just get discouraged by the process because it does seem so daunting, especially when you hear it on the news. You know, home prices are up, millennials can't afford anything, they're going to stay with their mom and dad forever. But you know, the truth is that I think that there's a lot of people that are in a position where they can either buy or they can either rent, and they end up going with renting just because they think it's a bit stressful to buy. but just in the long run, it would benefit you so much more.
For sure.
Have the conversation
For sure.
early.
Just have the conversation. That's
what you
that's
don't know, you don't know. So
That's it.
find
Sure.
out.
Just
and
have
the
that,
initial,
yeah.
the initial conversation, I'm not going to be asking for very much information. It's really just a very casual conversation on what you're paying monthly towards your current, rent, shelter expenses, what you're paying on your credit cards. Do you have any student debt? It's a very sort of overall just understanding of what you're currently paying, what your income looks like, and providing you with support and coaching and some goals and targets to help you move forward.
Exactly. And that's one of the things I remember too, is when speaking with you, it wasn't just about, okay, and this is for a lot of people. Like I said, if you're looking at renting or buying and then you think it's too much to buy, but if you speak with, like, I know when I spoke with you, it was, okay, maybe you can't do this right now, you can't afford this right now, but this is what you can do if you
Correct.
save. Like, so it's not just about actually having going through the mortgage and saying, yes, you can buy, no, you can't buy. It's, this is your goal. If you do this within 6 months,
She coaches you.
yeah, and it's a full it's like a financial lesson.
Yeah.
In with all your finances. So it's, save this much each month, and then by this point you'll be able to purchase this, right?
For
Yeah,
sure.
yeah.
Sometimes it's curbing your Starbucks spend, or
Starbucks.
or taking a break from the gym membership and maybe taking that run outside. But it's amazing how the numbers add up very, very quickly, and how by setting a plan and putting a plan of action in place where you have fixed dollar sort of commitments on what you're going to be putting away on a monthly basis, that you're able to hit those targets and get to that goal, and we move you that much closer to being able to purchase that first home.
We talk a lot about first home, and we talk a lot about millennials, and we talk about people getting into the market, and we just spent a whole bunch of time talking about it now. But I could tell you it's the same thing for somebody who's lived in a home for 20 years.
Correct.
And they're downsizing, or their kids have moved out, they want to sell. They've not had to think about a mortgage. Or applying for a mortgage or talking to somebody about it since they did it 20 years ago.
For sure. And things have
so
changed.
It's not the same.
It's not
It's
the same.
not the same. This fad called the internet, I don't know how much longer it's going to be around, but it wasn't around so much when they first were looking, and they expected someone to show up with a book flipping through pages. And it's, if you're either new to a mortgage, your first time, or first time in a long time, it makes sense to have that conversation, figure out how much equity is in their home, figure out how much can they buy. 'Cause I have the conversation a lot. Somebody wants to downsize, and they give me the plan of what they want to downsize for, but their income is not there also, because they could be retired, or they're winding down their business, or one of them is working, one is on Canada pension, and can they afford another mortgage? What does that look like? All these factors come into play, and it can be more complicated than a first-time home buyer that is getting into it the first time. So for anybody in the mortgage spectrum, new for in a long time, it only makes sense to talk to somebody, to talk to a professional.
For sure. Since 2017, we've seen some dramatic changes in qualification guidelines with lenders, and it's important to understand where your qualification sits. So even if you do have an existing mortgage and you're looking to potentially sell and purchase another property, connect with us. The consultation is free. We do not charge fees for our service. I'm more than happy to support you in ensuring that you're securing the right advice and support in making that decision.
The reason I refer Rakhee is not because she pays me. I don't get any referral fees from anybody I refer, whether it's a lawyer, contractor. You make our business look good. So when my client says, "Oh, Santo, thank you for referring Rakhee. She did a great job. We're so happy with her," it's an extension of my business. So just so you know, we don't give each other money for doing this, but we offer a certain service. Rakhee offers a service to my clients. If they can't get the mortgage that they are happy with, they're not buying. My money's in the buying and the selling of homes. Rakhee's in the process of qualifying them and getting them a mortgage. If she doesn't find them the best mortgage that they're happy with, she doesn't get paid either. Correct. So it's all about offering the best service to the client at the end of the day.
And that's all it is. It's just honest service, you know. And I think that's the hardest part, because I think a lot of this industry in general is kind of how should I say it? How do I
Just say it. Spit it out.
I just feel like people are very skeptical about, you know, agents, mortgage brokers, stuff like that. So,
Agents too? Realtors? Really?
This is news to you, right? So I you know,
And
it's,
there are.
it's
I
nice
meet
to-
them all the time. I
it's-
meet them all the time.
yeah.
I get agents. I get mortgage brokers calling me, asking me to refer them. It happens all the time. I get emails. I get texts. I get phone calls telling me, if you send me a client, I will give you so much money back. I get that all the time. I get clients that haven't a chance in hell of getting approved telling me, oh, don't worry, I got a guy who's going to approve me.
Absolutely.
and that's a whole other conversation.
It's just
That's not the service that Rakhee offers.
It's just about providing honest work, and I think one of the benefits that our clients enjoy, like the clients, the real estate clients, is the fact that we have someone like Rakhee who, you know, takes care of everything. Because my dad, he is a perfectionist, and he is constantly on the phone, and he just whatever his clients come first, no matter
For
what.
sure. And it's always in the client's best interest.
Exactly.
So
Right.
if it doesn't financially make sense for you to purchase, you'll have Santo support.
Exactly. And what he does is, and then just knowing that he has someone that he can refer and that he trusts, and we've seen time and time again, you do such a great job with the clients where they're always just, you know, it's on, you get compliments. You get people that say, you know, you did a great job, but then you get the people that don't, because they don't even realize how bad the transaction could have gone had it gone with someone else.
Well, a lot
right?
of people also don't see what happens.
Yeah.
The amount of work that goes
But
in
it's
behind the scenes.
So it's nice. It's nice to have a team like this.
Rakhee, thank you so much for
you.
taking the time out of your day to be with us today. It was fun. I've learned a few things. I thought
too.
I knew, but we've learned a
This
few
was great.
things.
Me too. I thought it was a real
Hope everybody
mortgage
else out there has a few things that they got out of this. And at any moment you want to get a hold of Rakhee, we'll have her information below in the video. Call us. We'll easily pass on her information. Have a great day, everybody. Thank you.
Thank you so much for listening. And I always do the outro where I tell them where to find this. So you can find this podcast on YouTube, the video version, and you can also find this podcast on Apple Podcasts, Spotify, Google Podcasts, and just about anywhere else you can go to get your podcasts. So yeah, with that said, thank you.
We need to make a commercial of that, I think.
We'll be back. We'll be back next week.
Have a great day.
Thank you.